So you probably figured, unless a crew of robbers come in like Ben Affleck in The Town, your money's safe at the bank. After all, Jerome Powell says,
our banking system is sound and resilient with strong capital and liquidity.
If it's so sound and resilient, why did we just see the second largest bank failure in US history? And we saw Jerome Powell raise interest rates another 0.25% in the same breath.
See, now that's some bullshit.
Now, I've been telling my clients for a long time the Fed is purposely orchestrating a recession. Why? To bring inflation down. In order to bring inflation down, you got to get people to stop spending money. How do you get people to stop spending money? You got to make their 401k get chopped in half into a 201k. They feel poor, they stop spending money. In fact, they are poor and we're in a recession. Now, this is the first time I've seen all 7 board members of the Federal Reserve say that they're expecting a recession. Yet Powell says,
no! No! No!
Most investors have no idea what it means for their portfolio when the Federal Reserve is hiking interest rates going into a recession. In today's video, we're going to take a deep dive into fractional reserve banking and inflation and what it means for you and I, the common investor, in our portfolios. And of course, we'll discuss Bitcoin, which could be your best bet for protecting your wealth. So let's get into it. So the banks are failing, and Robert Kaplan, the Dallas Fed chair, says we're only in the first inning. One of the problems with the collapse of SVB Bank and First Republic Bank, and now it looks like PacWest Bank, is that it can lead to distrust in the banking sector. One bank fails, then another bank fails, then another bank fails, and all of a sudden it can create the opportunity for a bank run. In fact, that's what happened at SVB Bank. Peter Thiel told his buddies, hey, get your money out of SVB Bank, and $40 billion was yanked in one click of a button. Banks typically have a fraction of their reserves on deposit in dollars, and they lend the rest of it out, aka fractional reserve banking. Now, the fractional reserve banking system assumes that most depositors won't withdraw all their funds at one time, but if too many people withdraw their money at once, the bank runs out of cash and has to telephone Mr. Jerome Powell. A few more failures in the US and all of a sudden Deutsche Bank could fail. Deutsche Bank is known as a GSIP. The failure of this could have much broader implications. As the dollar's value is tied to the banking system and inflation, if other people around the world start to lose confidence in the value of the US dollar, that poses the risk of global financial contagion, the worst possible outcome. I hope this doesn't happen. After the GFC, they did the Dodd-Frank Act that says if the banks fail, the depositors bail out the bank. The depositors pay off the bank's creditors before you or I get a dime. And if there's no dimes left, you're issued bank stock. Why would you want stock in a worthless bank? Doesn't make sense. To put it lightly, if you own a bank stock right now, you might consider, again, this isn't financial advice, I'm not a financial advisor, but you might not want to have investments in banks that are levered 25x, that are about to collapse, that are begging you from your credit union to put your money there in a CD for 4 years at 4% because they have nothing else to offer. Inflation and bank failures is the perfect storm for more market volatility and unpredictable price swings in the stock market. The one thing we can predict with 100% accuracy is that all fiat money is going to be debased. It's going to lose value. It's going to lose purchasing power. Despite us making payments, we're going to continue to spiral further and further into debt because of the interest on our $31 trillion debt. I mean, how are we ever going to pay that off? There's no way ever. So what's the one thing that they keep doing? They just print more money, raise the debt ceiling, raise the debt ceiling. And as the BRICS nations are building and more de-dollarization is happening, what do you think that means for the future of the dollar as the world reserve currency? The roosters have come home to roost. Somebody's got to pay the piper. You can't keep stealing from Paul to pay Jim. At some point, they figure it out. The fiat money system, it's a global Ponzi scheme in every country in the world. Debt just keeps going higher and higher. The rich keep getting richer. Why? They own all the assets. I just talked to a client today. He said, I own 200 homes and my rents keep coming in. And I said, congratulations. you're going to keep getting wealthier. Every time they print more money, your house value goes up. Over time, hard assets always go up in value because they're printing more and more money. And the people that own assets, they're going to get more of those dollars because they're the rent collectors. The people that don't own assets are still going to be just trying to pay for food, water, milk, bread, gasoline, insurance, the things they need to survive, right? They're living paycheck to paycheck and they can never get ahead. So what is the solution? What is the solution? Bitcoin, it's a system based on ownership, not based on debt. Smart money investments like Bitcoin and gold can hedge you against the current corrupt financial system that is stealing your wealth. What is the hidden tax that steals your wealth? If you can put your life savings, 100 grand in the bank today, and inflation's at 10%, that means in 5 years, your $100,000 won't buy you $50,000 worth of goods. That is theft. It's time theft. You earn that money, and guess what? The government devalues it. They tax it and take it away from you. Bitcoin is decentralized. There's no single point of authority. It's a system based on rules, not rulers. Everybody can participate in Bitcoin's economy. Everybody plays by the same rules, and they can never be changed. It's a monetary system that is predictable in the future. There's only ever going to be 21 million Bitcoin. It's a fixed supply. The traditional financial system, a system based on debt, all the corrupt people at the top get richer and the poor get poorer. Bitcoin is that lifeline. It's that lifeboat. So one of the keys of success is having a deep understanding of the underlying market dynamics. You got open interest, you got funding rates, the RSI, bullish and bearish divergence, Bitcoin dominance, Tether dominance. You should have an investment strategy. It's an entry, an exit, and a risk management. If you don't have all three things, you are just gambling. You might as well take your money to Las Vegas and go put it on black, put it on red. Once you have a strategy outlined for yourself, then you can be confident that you are making good investments in cryptocurrency land based on your strategy instead of just guessing. By the time Elon Musk goes on SNL and says buy Dogecoin, it was too late. That's all for today, ladies and gentlemen. I hope you'll consider scrolling through, hitting the notification bell so you're notified of any more of our important updates. If you want more information on protecting your wealth with Bitcoin within your retirement account, we have a free investor guide. You can click on the link in the description below. Feel free to give us a call anytime and talk to one of our live Bitcoin advisors, available 7 a.m. to 3 p.m. Monday through Friday. We're here to be of service. Thank you so much for watching, and I hope you have a blessed and highly favored day. Take care.